If you don't think we have a demand moving forward, folks, we have ETFs, and big industries and big companies can buy all they want now. And that's actually retirement money from other people who are moving their money into something a little more risky like Bitcoin, which only builds more sentiment and only builds more demand and only causes supply shock more. Now, we've learned that like you said when we first started this, Q4 of the halving year is the important time. So when Q4 of the halving year comes, buckle up and get ready, because this is where we go.
All right, I guess just to start it off, can you give people some background? I know I've done a podcast, I think I've done 2 with you before, but can you give some background into like your experience investing in crypto and all that?
My name's Keith. I've been doing this. So I've been in crypto since 2018. My first ever buy was September 12th, 2018. Of course, my introduction was XRP. Boy, has that been miserable. And I learned a lot of lessons because of that. You know what I mean? I think, I don't want to get off topic. The good news is I learned a lesson, a very valuable lesson. And then I used that lesson that I learned to do better. I already had known about technical analysis before that. I just never really tried hard. I did a little bit of Forex before I did crypto stuff, and also did some stock stuff before I did crypto stuff. And that was what I had been told was focus on this, focus on this. Well, again, when you get bad advice, you don't know you have bad advice till after. I learned the lesson the hard way. Okay. Failed miserably in Forex, failed miserably with stocks, got better. Once I learned it was all chart based and I got the charts down, everything changed. And from then on, it's been a ton of success with very few failures in there. And where it used to be full of failures and very little success. And that's the big shift that I want to see everyone take.
And one of your big claims to fame is last cycle, you did a really good job exiting at pretty much the exact top of the crypto market.
We were close. We weren't perfect. I wish I was closer. I feel like, you know what? That's the wrong thing to say. I don't feel like. I know I could have did better. All right, greed gets us all. And I got to the top and I'm going, all right, if I calculate this out just right, how many more days could I do this? And if I do that was pretty dumb. I could have just stopped. All right, I probably should have. So I know that now. And while I sold at like 61,000 or 62,000, the thing was absolutely higher than that. It was like 69 or whatever at some point. Didn't sell that. And then when it got down to like 57, I rebought, and then it went back to 62, and I was like, all right, now I'm selling. There was a little bit of chop in there, but it wasn't really Bitcoin that we killed it on. It was everything else, because actually alts lasted a little bit longer after Bitcoin kind of slowed down, if you remember. And we used the charts to determine when it was time to stop, and we got within a few percent. And then managed to sit in stable coins the entire bear market. While everyone was sitting watching their assets dwindle and fall apart, I sat in stable coins. And I had a few people who did the same. Most people didn't, though.
Did you, when did you jump back into the markets?
I got in a little bit late, just like I got out a little bit early, right? So I decided it would be best to not buy the exact perfect bottom because I wanted to be careful. I wanted to be sure of what I was doing. I think Bitcoin went all the way down like 15,000 and some change, right? So that was the absolute bottom. Obviously, you can try to catch the absolute bottom, but I thought that was a little too risky for me. For anyone who doesn't know, this is my life. I don't have anything else. This is all I do. So I can't blow that money. I have to be careful, or more careful than the average person, I would say, right? I don't have a 9-to-5 anymore. I quit that to do this full time. So if I don't do it here and I don't win, I'm going to fail. And I have a family, and I can't afford that. All right, I got a boy starting. One of my sons just started early college, and the other one just started middle school. I have a very expensive, needy wife. You can't be failing when you have those things. So I waited a little bit longer. I waited till we got to 20,000, and we got a back test of the breakout. Once we got a back test of the breakout, I started buying, and almost everything we bought was near the bottom, but not everything. Rode them up, bought, sold like crazy. That let me be able to hang on recently when things started to retrace and pull back. What was okay with me because I've already taken profits multiple times. And even failing and letting the market roll back, which it has for the last couple months. I think everyone's fairly aware of that. It rolled back for a couple months, and I was okay. I'd been sitting in profits. It's no big deal. As a matter of fact, I stuck my profits in Bitcoin, Ethereum. I stuck some profits in AVAX. I stuck some profits in Link, and they did not as bad as others. So now I can take that profit and put it elsewhere and buy the ones that I wanted to low.
I would say, when it comes to like selling the top, it's always good to be a little bit early. And when it comes to buying the bottom, it's always okay to be a little bit late. And
I would agree.
Because that's not going to hurt you. It's just like, oh, cool, I could have made bigger gains. But if you'd been wrong and jumped in at the exact bottom and it went lower, that would have messed you.
You got it. It's risk reward, right? Because you can risk it all, but I mean, man, I'm not that kind of guy to be gambling my life away. So I have to be more careful. And if it was like $100, that would be different. But at the top, I mean, that was $500,000. What? For me? I'm a poor kid from the hood. You $500,000? Excuse me? Like, that's brain melting to me. You know what I mean? And I had to be more careful.
Yeah, I understand. So looking at the market right now, just kind of to jump straight into it, what's your read on the market currently? We just had this like big collapse from the yen carry trade is what it was attributed to. I think there's probably more factors at play, but what's your current read on the market and what you kind of think is going to happen next?
All right, cool. I never attribute anything to news. Never, ever, ever. Essentially, the news is just people's reasoning for why things happen. The market usually moves before the news, and the news reports that. All right, it's already happened. The news comes on late, and then that sentiment is what people bite onto. Essentially, the market was super overbought. We've seen this cyclically 3 different times from Bitcoin, 2012, 2016, and 2020. This happened the same way each halving cycle. We had a big run up. It slowed down. If you remember, I went back and watched one of the podcasts that we did, and I kind of got on there and said, hey, man, this is don't get me wrong, we're at the bottom, but we're going to slow down, and things are going to slow down until this summer that I mentioned that we're at right now. And here we go. Things have slowed down until this summer. Now, I did say that I thought they would move up in July and August, and that didn't happen. It's actually pushed out now, and here's where your point of attributing something. Jerome Powell, before we got on here, went on and said, I think monetary policy is in such a way that we can start pivoting. And when you say that, you just told everyone you're going to cut interest rates. If you're going to cut interest rates, you are 100% kicking off a bull run. People will have more money, and if they have more money, they will spend more money. And if they spend more money, prices go up.
I was going to say, back then when you made that prediction, I think everyone expected rate cuts to happen a lot sooner. Like, everyone was pricing in those rate cuts happening way sooner than... And I think at this point, even with Jerome Powell kind of hinting he's going to cut rates, everyone's still kind of waiting, right? Because we've thought that he was going to cut rates forever. Like, I think the people had I don't know how many rate cuts priced in this year, but they thought he was going to start cutting early in the year. And they kept pushing it back to it was going to happen in March, then it's April, then it's May, then it's June, then now September.
Facts.
So I don't even know, with him hinting that the market's fully processed that information, I kind of feel like when he actually cuts rates, that's when we're going to see a bigger reaction, because then it's going to be more solidified.
Agreed. So what's really wild, every Wednesday we do a live stream in our Discord, and I just kind of go over my portfolio so everyone can see it, because I do everything out in the open and I don't want to hide anything. I kind of hate that about the space where people hide stuff. So I try to keep it out in the open where everyone can see what I'm doing. But Wednesdays are also the days when the Federal Open Market Committee announced their rates. So on that Wednesday, we don't talk about me, we talk about the market. We watch Powell do his press conference, and you can read his body language because he has a terrible poker face. All right. Also, they give out charts telling you that they're going to cut rates. And they've been doing that, like you said, since March. In the March one, I think it said 3 rate cuts. And then the July one, it said 2 rate cuts. And then in the last one they just gave, it said 2 rate cuts. Problem. We're in the middle of an election. That happens in a couple months. Powell has to either cut rates now or not cut rates, because it's likely he loses his job after the fact. So if you don't cut rates now, what is your legacy? That's the emotional part of his story. He has to have a legacy here. What's the legacy going to be? That I cut rates and brought the market and handed it to you on a silver platter, or that I waited and waited and waited and waited, and we watched wild things happen, right? I can almost guarantee you he's going to cut rates. The big question is how much. and he only has September to do it in. You're not going to do it in October. You're not going to do it in November during the election because the election is in November. They can't do it in August. There's no session. So that's it. They have to do it in September if they're going to do it. And that's on the 18th. That also just happens to be when the former president's sentencing happens on the same day. On the same day. So you can tell that's going to be a big day. Now the markets will hint to us before that what's happening. I can tell you now that a lot of charts are flipping back bullish from bearish. They're flipping, giving us buy signals. If that's the case and you're giving us buy signals before a big event, that's usually a clue that we're heading in the right direction.
So is that what you think is going to happen next? So we're going to have rate cuts. It's going to be a pretty decent, maybe let's say like a 50 basis point rate cut, and then the market's just going to fly going into
Here's
the end
where
of the
we're
year.
gambling, right? How big is the rate cut going to be? So I'll do this. I'll lean conservative and say 25 points. A quarter of a percent. So 25 basis points. Why do I say that? Because Jerome Powell's a wimp, dude. He's a wimp. So he always does the wimpy thing. You know what I mean? Diary of the Wimpy Kid. He's it. And he has bad body language. Again, you can see when he's leading you on, and you can see when he's got a fact because he doesn't move his eyes. He's very locked in. His hands don't move. He's got that fact down, and he knows he's going to say it. Then you can throw him off. And when you throw him off, he starts looking to the left and looking to the right and trying to figure out what to say. Right? It's terrible at poker. You can tell. So today, same thing. He was locked in. He was locked in. He knew exactly what he was going to say, had the answers ready. So at least 25. Do we get 50? Man, if we get 50, that's more bullish than bearish in my opinion. 25 is bullish, but 50 basis points is more bullish. We've already had a run down before the rate cuts. I think the big down is over. We may have small, tiny corrections here or there, but nothing like we just had. We wiped $1 trillion off the market. That ain't going to happen again because there's not that much left to take. So I think we get rate cuts. I think really the big moves happen post-November. After November's the big moves.
So I've been looking a lot at it, and I've been looking at, I mean, historically, crypto just does really good from October to like February. Just like if you look back at I went over like the last 10 years, and every single parabolic rally that we've seen happens in like this October. I think
Q4.
maybe one was November. Yeah. Every single one has ever has happened then. And so it's just a strong season for crypto. And I've heard it attributed to like people are back from vacation, they're stuck at home. And I've actually, I kind of lean into that. Like when people are stuck at home for whatever reason, winter, COVID, they get bored and they gamble money. And so I think that's why crypto does so well. So we have that strength. The thing that I agree with you, actually. I fully agree with what you're saying in that like the end of Q4 is going to do really, really good. The thing I've been looking into more is that like last time when we had the big rate cuts, we had quantitative easing at the same time, and we don't have that policy yet. And I don't know if you've looked into that at all. Do you have any thoughts around that? Like, do you think that they will flip to a position of like, hey, let's stop doing tightening and let's start doing some easing?
Let's start with the first thing you talked about. I never attributed any of this to people. That's the number one thing I don't do when I start asking what's going to happen. The people are a vast minority of actually what's happening. You look at this and don't understand it at first, but over 80% of the market is not people. It's bots and automatic software trades that have nothing to do with people at all. Retail only comes in the last half of a bull run. That would not be October through February. Retail would come in the next summer with the end in between the middle of 2025, and that's that big last push, which is what we had in 2021. That was retail money coming in. The last half of 2021, when all the really dumb money come in, that's retail. All the money before that is money that's already in the system that starts the trend. Once the trend starts, the bots go, and this has been happening. I want you to understand this is not my opinion. This is a fact. This has been happening since the mid 70s. It got really, really prevalent in the early 80s. It super picked up in the 90s, and now it's 10 to 15,000 net trades per nanosecond. We can't even think that fast. How can we attribute that to people, right? Now, is there a person or a system of people controlling this system? Yes, but they use parameters that are based on technicals, not on opinions. That's the difference. So I have to shift away from thinking about people. Plus,
can I pause you right there? Push back a little bit. I understand there's a lot of bots. You have things like leverage, shorts, different things like that get triggered that they do cause certain movements in the market. But ultimately, even if the majority are bot trades, the market is moved by people's emotions and their sentiment. And so maybe
4%.
Think of maybe that small driver of like, hey, this people's emotions, sentiment, etc., might cause like a push in the market that then triggers maybe effects from those bots or liquidations or different things like that do maybe have more of a predictable outcome. But definitely you can definitely when people are feeling more bullish, like you see, especially in crypto, like you see certain altcoins take off or meme coins or whatever. And I'd say especially in the crypto markets, like there's a lot of bots, but it is, in my opinion, heavily dictated by people's emotions and sentiment.
I can show you the data on this. It's between 4 to 8% people. We actually had a guy running a program for me in the background watching meme coins. 13 seconds, the meme coin was created. 13 seconds after the meme coin was created, 11,000 bots were already on that meme coin. They were not people, they were bots. 13 seconds. All right. The really cool thing is to watch them on the blockchain and you can pick out the orders and see which one they are because they're always the same orders. They're always the same amount. They're timed to do a certain schedule. Bam, 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 bam. That's clearly not people. Always the same amount, always the same time, always the same schedule. Wallets that were just created. All that's bots. I will agree with you that people matter. I don't think people don't matter. I think they're the last 4 to 8%. Essentially, once you realize that you and the people you know can't affect the market, everything changes for you and everything opens up and you start to see when the top's going to come in. Because what you just said was, oh, when I see people being emotional about, I think 100% opposite of you. When I see people getting all bullish and starting to shield stuff, that's when I start getting out.
No, I agree with that. So when people are when like the market's overly frothy, that's typically a sign to get out. But again, it's a sign to get out because of people. Because what are people going to do? They're going to take out leverage. They're going to do stupid things they shouldn't. They're going to over allocate into crypto, and when the market gets shaky, that's going to cause a cascading collapse, and that's typically why you see that collapse. And so, but obviously in between there, right? Like, so they pull out their money, that starts to cause that cascade. But then there's liquidations, there's bots, there's all sorts of things in the middle that are playing into that. But I think primarily as a driver, it is always going to be people that are driving, especially in crypto. Also, you have like influencers, right? Like you'll see an influencer shill a token on Twitter, or like they're talking more about this token than that token. And because of that, the price of that token starts to really gain some traction. But then typically it dumps really hard, right? At the point when everyone's talking about it, that token then dumps really hard because so many people are in profit. It causes different outcomes. So I'm not disagreeing with you that bots. There's probably way more bots in the market than there is people, but just that like the driving force behind it is going to be maybe the tip of the iceberg is going to be people kind of steering that ship. It's the small rudder at the back of the ship, like their emotions and sentiment, their reaction toward the Fed, everything like that steers the ship, and then causes the different effects that maybe are played out by these liquidations, bots, etc.
We're going to hard disagree on that forever. The thing is, everything I have has a chart. There's no opinion or thought needed. It's all based on fact. Those people that you're talking about, don't get me wrong, I don't disagree with you that people matter. It's just that the facts and the data show that a vast majority of it is not people.
Well, maybe break down how you think it works then, so I can understand it, because I'm not getting a clear picture. So in your mind, is it like bots are looking at the charts and then like certain moments are like buy, sell, or how do you envision, like, what are the catalysts that push the market any which direction? This
is cool because I can give you an example of how I figured this out. I used to fix air conditioners for a living, right? I did that for 17 years. It sucked. But 17 years, and I'm honestly, after 17 years, you get good at it. So I got a call one day to go to this brand new high rise. Never been in a high rise before, which I thought was really cool. I'd never been anywhere, but now I got a call to go to one. It's Bank of America. And it's a brand new building. The ice machine on the 17th floor, 17th floor doesn't work. It's brand new. So I'm like, okay, cool. I'll go to check the ice machine. I have to go into a server room to get to the condenser, which is above the server room. Terrible design. Why would you ever put that above the server room? But they did. It makes water. It's a terrible design. So Anyway, it's got water in it, and that's why it's shut off. So no problem, I can fix this. There's a guy sitting there, and I happened to look at his computer, and he's looking at a chart. And I was like, well, if I get a chance, I'll ask him about it, because it's a guy doing charts. Hey, it's me. So anyway, I'm on the ladder working. I see him clicking through stuff, and then he clicks off the screen, and it's running DOS. It looks like MS-DOS going a million miles an hour, like the Matrix. And I was like, what the hell is that? Right? So I dropped my screwdriver on purpose off the ladder, and it bounced on the floor so I could go pick it up. I said, are you charting? Like jokingly. He said, kinda. And I was like, what do you mean? He said, well, I'm just monitoring the program. I just monitor the program all day long. I said, you sit here all day and look at that? He's like, well, yeah. I was like, oh, he said, well, this is just the monitor for that. And I was like, what is that? And he opened the door. And here is this massive floor of servers that are all trading nonstop, 100%, 365. They never cut off, and they don't care what people are doing. They don't care about anything except the data. This is one floor of thousands of floors of servers that are trading nonstop 365% of the time, 365 days, never thinking about what a person's doing. After talking to him, he kind of explains it to me and says, well, these things are setting the market. And then when people react to the market, these bots react, and they run an algorithm based on that, and they run it faster than you can possibly think about it. He says, you're not going to understand what I'm saying. And I played stupid. Says, you're not going to understand what I'm saying. He sends me a couple videos, and he sends me some videos of some stuff where some people already figured this out back in the day. And I'm like, there's no way. So I watched it, didn't really believe it at first. At the time, I'm making good money. So I paid a guy in New Jersey. I paid a guy $500 in New Jersey, which sounds like a lot of money, but back in the day, you remember in 2021, we were making like 10 grand a week. What's $500? So I'm like, here's $500. Go to this place where this guy says this is. And will you take a picture for me? Take a little video with your cell phone. He drives up to the place, immediately armed guards stop him. Immediately armed guards stop him, say, nope, turn around. We know what you're doing. Back off. He took a picture and showed me the armed guard standing at the gate. He's like, it's real. And what was that? It's a massive warehouse in New Jersey that's full of servers that trade. That's the shortest distance possible for the size from the antenna connected to the main markets. They have the largest possible Wi-Fi line, the largest possible antenna, and the best connection possible to make the market make it happen for them when they want to. And I say this to prove the point. We can't beat that. You cannot sway it. You cannot stop it. You cannot change it. There is nothing you can do to break it. Now, I say that because one person managed to break it, but he happened to work for the company who helped build it. They then caught him, took all of his money, and stopped him from doing anything else in the market now, right? So the one guy who broke it, they took away. Now, since then, they've added in safeties, and those are called breakers now. So we have breakers that we didn't used to have. He created the breaker because he broke the system, and that happened with Apple back in 2007. Good luck finding Apple in 2007 at less than a penny. But that's the price Apple traded at in 2007, less than a penny, right? Great example of your point of what if it's people, right? If you saw Apple at less than a penny, what would you do?
Obviously buy it. Yeah.
Buy. It was trading 17,000 times per nanosecond short at less than a penny. What human would do that? What human would short Apple at less than a penny 17,000 times a nanosecond? I
understand this point. I understand that like bots are involved in the market, but I guess what I'm trying to say, especially in crypto, let's put aside the stock market and let's say, like obviously there's really sophisticated operations like this in the stock market. In the crypto market, much more less so. Like I know of Jump Capital, like there's definitely some who do like market making, some arbitrage, etc. And there's definitely like, especially with like things like meme coins, MEV, there's bots that are doing things in the market. But when it comes to trading and like just large amounts of capital, a lot of the capital is pretty well distributed in crypto and pretty well distributed in the hands of like builders, investors, etc. So I guess I would say that, like, especially when you're talking about alts, et cetera, like, what TradFi, what large operation is going to be trading, Boink Boink coin and some of these other things, right? Like, I think the meme coin ones, you have scalpers running bot farms that are like pushing it up, manipulating the price. Then when people buy in, then it's basically like MEV. They're capturing it and selling it to capture that profit. But I think a huge part of the crypto market, even though there might be bot operations to like buy things quicker or buy them at certain limits, etc., is dictated by organic sentiment on some level. But what I'm really trying to get down to is, when it comes to your theory, is what instigates like a rally or not a rally? Is it just going to be data in crypto specifically? Is it going to be data, or like think of Solana? Solana crashed down to $8. What brought it from $8 back up to 150?
All right, cool. So there's a couple base level things to think about here. Your description isn't wrong, but you're bringing up the exception to the rule, and that doesn't make the rule. Meme coins account for less than 3% of the market. The other 97% of the market doesn't really care. Now, that doesn't say that they don't do it. It's just that they don't really care about the 3% because the 97% is more important. The 97% makes the rule. This has been happening in crypto since 2012. It has not been happening since 2019 or 2021 or 2023. The ones you're thinking of are the pepperonis on the pizza. You're not seeing the dough that was built on the bots, the ingredients that went into making the dough. All that's the pieces that people don't even think about that are not people. And they were able to accumulate a lot based on that. All right. Especially institutions. It's not what you think. I don't mean Goldman Sachs. I mean companies that you don't know who trade this stuff nonstop, 365, 24/7 with a fresh wallet address over and over and over and over and over again. They report, but it just looks like a regular company to you, which would be a stock. All right. They've been doing this for a long time. This is old stuff. Now, I would agree that meme coins are a touch different. They happen very fast, and big industries aren't really caring about those. That being said, the people are still the icing on the top. And now it's a little bit different for those. Those are more about 20% people. Now, I won't disagree that people matter more on those. I'm with you on that one. That's kind of how I base everything now. Solana is a great example you brought up. Again, you're not wrong about this. From $8 to where it is now, that's a long way, yeah?
Yeah.
In my opinion, Solana looks almost identical to what BNB does. If you go back and look at what BNB did last bull run, Binance Coin outran everything up until the point we are at right now. In fact, Binance Coin broke all-time high right about now, last cycle. Interestingly enough, Solana's threatening to. Hasn't done it yet, but it's threatening to.
And if you look at market cap, Solana has broken all-time high.
Absolutely, right. I get it. Now, if you think about dilution and inflation and all that crap, if you just look at the chart, it hasn't quite broken. It got close, and obviously it's clear it's gonna. You know what I mean? No matter what, it's gonna here. Once the trend is broken, and the ground foundation is set for what's going to happen, up the trend goes. And here you go. You're right. It does matter if a bot sees one sentiment. Hey, this coin's doing better than the other. This chart is doing better than the other. Well, then a majority of them go to that. It's very simple. The algorithm runs on its own. So when it sees that Solana's doing better, well, why would it go to something else when it's still killing it? You know what I mean? And it'll do that till it breaks the trend.
Okay, so you're saying that so you're saying maybe so people rallied together, they believed in Solana, there was a lot of popular sentiment behind it, that pushed the price up, and then from there, the trend was continued by the bots, and that's what took it higher and higher.
Perfect description.
Okay.
People account for 10%, they get it started, and then the bots go time. And then they do the big moves.
I can see that, and I don't necessarily disagree with that. And I'd also agree when you gave the pizza analogy of the icing on the top or the pepperoni or whatever. I would think in terms of like liquidity, just overall macro picture. Like a lot of these things do determine where the market goes, and I think that's one of the big reasons we have this 4-year cycle in crypto. Is those elements, right? And that's what's kind of push it. Like as liquidity unlocks, it flows into crypto, pushes in there, and people's sentiment is definitely affected by that initial kind of move up. That continues it to some degree, and then other forces take. What's that?
Don't disagree.
Okay. Yeah. So I guess I was trying to understand it and more understand your opinion on how you see it. I don't. I think we're saying about the same thing, and I think we mostly actually do agree.
I don't want you to think I'm just flat out telling you you're an idiot or anything like that. That's not the truth. It's just that over time I've learned that people are incredibly untrustworthy, likely don't know what they're talking about, and since they likely don't know what they're talking about and likely untrustworthy, why are we worrying about them? And I can't control what people do. And if I have a chart that looks very controlled and I can't control people, then well, what is it? Right? So I have to look for the answers and find the answers that don't care what I think. You know what I mean? That removes my opinion and hits me in the face with facts. That's like a subjective and objective fact. Like a subjective fact would be me saying, oh, this microphone is purple. And you'd look at it and you'd go, no, it's not. And I'd say, well, I think it's purple. And you'd go, well, that's your opinion, but it's wrong. And I would go, but no, it's, you'd say, objectively speaking, I'm looking at it, it's black. And I said, well, I think it's purple. See the difference? Yeah. So we both have an opinion, and one is clearly subjective and one is clearly objective. I hate messing with the subjective because it just throws me so far off. And then I lose sight of the picture, if that makes sense.
Yeah, I guess that's what I mean when like people dictate is there is a certain element of, if people are really using and liking Solana and there's a lot of attention on Solana, you can expect the price of the token SOL to go up. And
eventually I would agree. Yep.
Yeah. And like right now, one of my theses with Polygon is they're about to have a new token. Their token's going to switch from Matic. It's going to become Pol. And with a new token comes new attention. It's kind of like the shiny new object. People start talking about it a lot more. As it gets more attention and that permeates more mind share, it goes on like different podcasts, etc. Eventually that leads to a catalyst that starts pushing the price up. And so when I say the rudder steering the ship, that's what I mean. It's like, I don't know if that makes sense, but
yeah. So are you aware that Matic did this last time before the bull market?
No.
Yeah, this isn't the first time they've done this. It wasn't always Matic. It was Poly before that.
Yeah.
They switched the name. The chart went exponential. They've learned that if they change the name right before the bull market, that everything's bullish and it looks really good. And by the way, go find the old Poly chart. It disappeared. So you can't see the support and resistance. You can't see what it looks like. All you see is the up, which builds that sentiment that you talk about.
Aave did the same thing. They used to be Lent.
Correct.
And they
Pundi
rebranded.
X did it. It was NXPS. They changed it to Pundi, then they changed it to Pundi X.
Old tokens should. I actually think they should because they get ignored by the market. Even if they have great fundamentals, the market ignores them if they don't rebrand, which is. I believe
the community calls those dinosaur coins. Yeah.
Yeah. Cool. Well, so moving on. Do you think that we're going to see an alt season this year?
Absolutely, in November.
In November? Okay.
November to May.
What do you see the catalyst for that?
Bitcoin. You ask about the 4-year cycle. This is the basis of everything I do, okay? This is real simple. Bitcoin is a mathematical machine. It cannot be stopped. It cannot be changed. It cannot be manipulated. That's the beauty of Bitcoin, and that's my only shield I'll give you on Bitcoin. It's supply and demand based, meaning the more supply, the less it's worth. The less supply, the more it's worth. It mimics gold. It's mined out of the ground like gold. The more you get of it, the less it's worth. It's very hard to find. So if you find it, it's very valuable. It's very hard to mine Bitcoin. So if you get it, it's valuable. That drives the price. Every 4 years we have a halving. Why do we have a halving? To keep the math better. That's why. It's pretty simple. But this gives us cycles. If everything wasn't technical based and math based, which is all TA is, it's all I do is math, then how do we already know when the next halving is? Right? How do I already know when the top is going to be, which is going to be November to December 2025? How do I already know that? Right? How did I know exactly when the bottom was going to come in? How did I know this summer is where we would be sitting at a year and a half ahead of time? Right? How do I know this stuff?
Have you seen the liquidity cycles chart?
Absolutely. Yep.
Yeah. How much do you think the 4-year cycle has to do with Bitcoin's halving versus just the fact that it happens to be on the exact 4-year liquidity cycle?
So this is a bit subjective up front. Couple things. Number one, it's supply and demand. But that supply and demand wouldn't matter if there wasn't a market for it. Okay? So you can have all the supply and demand you want, but if nobody likes your shit, no one buys it. So you have to have some people like it first, which means we had to have a government screw up for this to even be happening. All right? Now, the good news is they screwed up and they bailed a bunch of banks out, and that ticked a lot of people off, and they said there's got to be a better way. Now, it was created. Once it was created, it took a while to get out of the mud, but once it got out of the mud, it really took off. And once inflation happened, once people saw all the numbers, they go, man, there's got to be a better way. This I agree with you on, and that's where I say it's subjective. That's a bit of an opinion and not fact-based. What's fact-based is the supply and demand aspect of it. We already have a demand. That's set in stone. If you don't think we have a demand moving forward, Folks, we have ETFs, and big industries and big companies can buy all they want now. And that's actually retirement money from other people who are moving their money into something a little more risky like Bitcoin, which only builds more sentiment and only builds more demand and only causes supply shock more. Now, we've learned that like you said when we first started this, Q4 of the halving year is the important time. So when Q4 of the halving year comes, buckle up and get ready, because this is where we go. Now, typically it runs until tax season the next year, which is between February and May. All right. So that's about where we'll hit a high point, and different alts will hit different times and different levels, but in through February to May is going to be our top. All right. So we'll start in roughly from now till the end of the year. That sounds ridiculous, but I can't give you an exact date. I'd like to say October 17th. That's a stupid number, but October 17th till February or May is our up move. We'll have a little bit of a lull cycle to retrace and let things breathe again. Let the market figure it out. Well, that's liquidity cycles. Let the market breathe and figure out what it wants to do. People have got to short. Shorters have to make money too. And people really, really, really like profits, by the way. So take some profits, relax, and then the summer push comes. And then that retail that I agree with you on, that's when the summer happens. If you remember the big push in Doge, the big push in SHIB, all that was in the summer.
So when
that
you
was
say
the
that,
summer when
you
things
say
were
the
popping.
top in May, you mean a local top, but like the big top will be late 2025.
That's our first high. How about that?
Okay, got it.
Our first high. Then we'll make a higher low in the summer there, and then we get a big push up after the summer, and that's particularly the bigger alt season. You'll see Bitcoin and Ethereum do well. Don't get me wrong, but a lot of the money is going to trickle down, because that's how money works. It always trickles down, even if you don't want that to happen.
With you being like really into the supply and demand of Bitcoin, what do you think of ETH? We had the merge, right, where it went from proof of work to proof of stake. Its emissions was like 3% annually or whatever before the merge. After the merge, so Bitcoin's halving, emissions get cut 50%. The merge for ETH, the emissions got cut effectively over 100%. Like all emissions were offset by then the burn. And so it was actually deflating, not inflating at all. So Bitcoin inflates at a
Because
rate.
it's sharding, yes.
Yeah. So why, and this is a mystery for me that I still try to figure out is the expectation would be if demand was stable, right? Demand stayed consistent. Why then, with such a massive reduction of new supply coming in the market, did we not see a run up in ETH price? I mean, we did. Like ETH price went up, but it more just tracked Bitcoin and actually lagged behind Bitcoin after this point. Any
See, now
thoughts
you're
around that?
learning. Now you're learning. It doesn't matter what we want or what we think. It's all about the computers and what they decide. This is the problem. And the same thing we were talking about in Discord when it was happening. We were talking about the literal same thing. We were going, dude, it's supply and demand, right? Well, okay, well then we should add a price. And I look at the chart and it's not a buy. And I'm like, all right, if we're going to have an event, then we have to have a buy signal on the chart. And why don't we have a buy signal? It's like not even close. Well, then it happened in 3 days later and then a week later. And I was like, well, all right, like 2 weeks later, it starts to go up. And I'm like, okay, maybe it took a bit. And then it only went up like 20% or something. And then it started coming back down again. And I was like, okay, so what's the deal? Well, what it comes down to is everything just follows Bitcoin until alt season. And then don't get me wrong. I don't even count Ethereum as an altcoin anymore. Seeing as how they have an ETF, I count it as a blue chip. In my opinion, there's only two blue chips, Bitcoin and Ethereum.
Yeah.
Everything else is an altcoin until it becomes a big dog. When you got the big dogs trading it publicly with an ETF, I mean, you can't deny that's a blue chip anymore, right?
Yeah, and I've come back to that. So like that's one of my ways of thinking of it. But I always try to think: am I just like coping, or is this legitimate? Which is
right.
That we did what happened after the merge is we had the announcement. We didn't know before this, but Larry Fink came out, became a Bitcoin bull, and talked about the ETF. And then we thought we're pretty confident at that point that we're going to see an ETF. We did see an ETF. So then it kind of makes sense, puts in line like Bitcoin's outperformance. It really was that not that ETH didn't do great. ETH did great, but Bitcoin outperformed because it had the ETF. And this will be proven true or false, in my opinion, pretty soon here, probably within the next couple of months, because now ETH does have the ETF. We're working through those outflows. And as soon as we've exhausted the outflows to a point that, the demand takes over and we can start pushing up, we'll see. If ETH has a big move up, it starts to push back and take back ground. Then we know that, maybe that was the reason that it happened.
I just swapped $5,000 from Bitcoin to Ethereum before we came on here.
Did you?
Why did I do that? Because the chart says so.
Hey, I like that.
It looks like Ethereum is going to make a move here, and I want to catch it. And I prefer to be in Ethereum rather than Bitcoin because I think there's more gains in Ethereum. Now, the kicker is Bitcoin usually goes first. Yeah. So I could wait in Bitcoin, but I had such a sizable position in it. I was like, all right, I got enough. Let me hit it over here to Ethereum. I think it'll do good too. And even though if this isn't first, even though if it follows Bitcoin, it's fine. I'm still going to do all right. So I'll leave it in Ethereum for time being.
And that was me. I put a lot into ETH instead of Bitcoin, and it underperformed. It wasn't so big of an underperformance that it was like, it's not like ETH didn't do anything. It went up quite a bit. And I made a lot from airdrops too. So I was like farming airdrops. I made over 2023 to 2024, I did like 100K in just airdrops, airdrop farming with ETH, not just ETH, like some of it was other stuff. But so that made up that yield I got from it did make up a huge portion of that ground. But still, it is one of those mysteries like that kind of shook me for a little, not shook me, but like made me question like some of my theses because it seems so just clear, like supply and demand. Demand stays consistent, supply gets reduced by over 100%, token should go up. This is what we were taught about Bitcoin, etc.
A couple things you just mentioned, which is interesting. So the inflows and outflows, people were monitoring that in the Discord, and then we learned it was kind of useless. We would see one day that outflows would be so high, but the price didn't move. And then the next day, the inflows were flying in, the price went down. And kind of what we learned is this is the big dogs taking profits and passing the coin off to you and the ETF. This is them getting their money and handing it to the people who's buying the ETF and saying, well, you hold on to it for a little bit. We like profits. Now, will that change? Yes, that will change. Essentially, the Bitcoin and Ethereum are at or under the prices they were at when the ETFs launched. If it was so bullish, how come the price went down? Right? If everything is so bullish and all this new money's coming in, how come the price went down? Well, the new money come in and simply handed the money off to the people who were waiting to take profits. And now the new money holds, but this isn't necessarily a bad thing because the ceiling is so much higher now because the floor is higher. That new money held the floor flat, which is pretty good. Now that we have a higher floor, this opens up a higher ceiling. And that's why I think we have a possibility of a blow off top. We didn't get that last time. Last cycle was the first time we didn't have a blow off top.
Which we should have. It didn't make any sense because look at like how much money was printed, how much liquidity was poured into the system. The fact that we didn't have a blow off top was, again, one of those things where you're like, if you were to just look at it on paper, you'd be like, not only should we have a blow off top in 2021, but it should have been the biggest blow off top. It should have been insane.
Right. So here's a kicker for you. If you look at the chart, everything simply scaled down. The same chart that we would have had 2012, 2016, 2020 was the same chart. It was just scaled down a level. And honestly, it looks the same. It's just a level down. So if you move that same level and pretend that it didn't happen in 2020 and we didn't have a pandemic, if you move it up to the non-pandemic level, it would have almost hit a blow off top. So that tells me the math was still sound. Essentially, we just had a wild time with a ton of crazy politics and economics, and that moved the chart, same shape, just down a level. Now, this time we haven't had that. Now our chart is up at that same level where it was before. In fact, we're a little higher than we were before. Not much, but a little bit. So this opens up to me, I'm looking at it, it's sitting on top of Sniper's Alley right now, which is 88.6% of recapture of a market cap. 88.6 is already there. This point in 2020, we were at 33%. 50% ahead of the curve. 2016, we were at 61%. So we're 20% ahead of 2016. Go look at 2016's chart. Oh, it's just a straight up mountain climb. All right. So if you look at them all side by side, we're still very similar to 2012, 2016, and 2020. The only difference in 2020 was we had that pandemic, right? I think we get something similar. I don't want to say we're getting a blow off top because that's hopium. I don't want to do that. But I do think we get to at least the 1618 fib, which is going to put us around 170 to 175. And I think Bitcoin probably does it first.
That's funny.
Then you'll see money trickle down to Ethereum. Then you'll see money trickle down to alts.
I put together a report. It hasn't come out yet for my community. And I put it Bitcoin at around 168 to 180 for like the price range of the cycle. And I forget how I think what I did is I took each cycle. If you look at the chart as how high it goes, it almost like just cuts in half the percentage every cycle. So if you just like cut it in half, the percentage, just about, it's not exact, it would put us at around 180. So I don't know how you got to it, but you're not the only person that said around that zone. I heard somebody else, then they did like a different analysis on it, and they got 182.
Show you what, I'll send this to you in the little chat right here. Hang on. This is going to look jumbled because it's a quad screen, okay? So like, don't think too much into it. Talked about this on the live stream last night. I've labeled them 2012, 2016, 2020, 2024, obviously. So 2012 is the kind of the anomaly. It's the only shorter cycle. Everything else is timed within 2 weeks of each other. Having to top to bottom, everything within 2 weeks of each other, which is amazing. So we have a good baseline. More so what I want to hit on is in 2012, we ran up to a Fibonacci line, which is mathematical support and resistance at 1618, and it stopped. It kept going, but it stopped there. Same thing in 2016, 1618, same spot. 2020, 1618, same spot. Now, here's in 2020 where things were different and it didn't make a new high, right? But either way, 2024, 1618, it's literally the same. 175, 177, call it 180. I would say it's more around 60%, not 50% of what you were trying to do the math. But either way, it comes out really close. You know what I mean?
Yeah.
This is just chart based, not anything else. You did math with percentages, which is cool. And that's kind of what Fibonacci is too. It's percentages, 161.8% more. Does that make sense?
Yeah.
1.618. It's just mathematical numbers, but that's how I came up with this. Now, a blow off top, that leads us up toward 500,000. And it did a blow off top in 2012, in 2016, and just didn't do it in 2020. That would have been 200K. We just didn't make that. So if we did get a blow off top, it would be between 300 and 500K, which is insane to even talk about. And it feels like hopium. That's why I don't want to be like bringing it up. You know what I mean?
Yeah. And so just to describe for people just listening, he showed a chart. It was like the 4 different cycles that we've been through. If you guys don't know, this is the 4th crypto cycle. The last 3 have followed a near identical pattern. They've done essentially the exact same thing. Some people think this cycle that it's going to be different. It's broken. We have ETFs, etc. now. But up to this point right now, it is like played out exactly the same. So there's no indication that it's actually been broken. That's just what a lot of people think. And I almost think you have to have people thinking that it's broken for it to work. Because if people think it's going to work, then they'll front run it and then it won't work. So it's one of those catch-22s. Yeah.
It's perfect, actually. It's a wonderful system. I need people to not believe me.
Yeah.
Why is that? Because I need someone to sell to.
Yep.
That's crazy to say that, but that's how it works.
The ETFs too. You mentioned 500,000 Bitcoin, and that does seem insane. But we saw how quickly we moved up from those ETF inflows. We went from like what was like $30,000 or $40,000 Bitcoin to like 70,000 in like I forget. It was like a week or two. So I don't think it's that outlandish to think once it really heats up, we could see some real action coming into Bitcoin, especially when you think about the fact that most of the ETF participation has been like TradFi retail, and like the big money, the vast majority of like trillions and trillions of dollars that could invest into Bitcoin hasn't quite done that yet because they have all these due diligence processes where it takes 6 months, sometimes a year, where they have to really check off all the boxes because they're dealing with so much money before they're going to allocate any capital into it. And so there's just so much unlocks and potential when it comes to liquidity flowing into Bitcoin. So I don't think it's that outlandish.
Yeah, that's a good point. To expound on what you said right there, if you think about it, what has made anyone jump up and say, yes, put my retirement money in Bitcoin? Nothing. It's just people speculating so far, right? Oh, I'll put 5%, I'll put 10%. But if you saw Bitcoin break 100K, 105, 110, don't you think the average person who's 50 plus would go, hey man, let me call my guy real quick.
Yeah, 100%.
Let me do 20% instead of 10%. Okay, that's a ripple effect. And now you created a big system here where people are going to keep doing that and doing that. And as long as I see the number keep going up, I'll just keep doing it.
Yep.
Because that's dumb money. When I see the number go up, I must buy. Right? I buy when I see it go down, not go up. I sell when I see it go up. You know what I mean?
Yeah.
So this is the people I need to come in. Because realistically speaking, let's do the math here. Your 100,000 that you farmed turns into 2 million. You've got to sell that at some point. Who are you going to sell to? You need people to put money in so you can get your money out.
That's true.
It just has.
I was going to say it's also not just dumb money. Like I don't know if you're how familiar with Sharpe ratios you are, but I listened to this really interesting podcast where it was like an ETF guy, like he's like a TradFi guy, really involved in that space. And I was previously unfamiliar with kind of their thought process behind it, but it makes a lot of sense. But a lot of these allocators, like the big capital, the way that they look at investing is based off what they call a Sharpe ratio, which is risk adjusted like gains. So like they'll look at it and they'll say, if I invest in this, what Sharpe ratio does this give me? And I'll tell you, like, this is how much risk you're taking on. This is how much potential reward you're taking on. And their goal is just to get their Sharpe ratio. I think it's higher. I don't remember if it's lower or higher, but to whatever, like the better area. And so when you look at Bitcoin or crypto, because it's like differentiated enough from the stock market, et cetera, it gives them a higher Sharpe ratio score because of the gains you can make versus the risk adjusted. And they said that was the most bullish thing ever. And they thought that they could see a lot of these capital allocators saying, hey, if I take 3 to 5%, because that was a specific number that increased the Sharpe ratio to the highest level they could, this is going to increase my Sharpe ratio and make me look better, like a better capital allocator. And so that got me really bullish, thinking about, like, if you look at it just purely on a numbers game from these capital allocators, it's really bullish for them, and it makes them look really good as investors to allocate between 3 to 5% into crypto as a whole.
Absolutely. So what you just described is basic risk reward ratio I take on every single trade. I look at the trade and I go, if I buy it here and it goes to here, how much will I make? If that is too low, I don't bother, because I would rather buy something that's higher. That Sharpe ratio that you're talking about is just basic risk reward for me. So I'll look at, like, for instance, that I looked at Bitcoin and Ethereum this morning. I went, if Bitcoin goes from here to 70, that's decent percent. But if Ethereum goes from here to 4,000, that's almost 3 times. Well, I would prefer that one. Plus, the charts look similar, so I can go, okay, yeah, I can rather be in this one. The risk reward is better over here for me than it is over there. I do that on every single time. Every single time.
Yeah, I do stuff like that too. But for me, it's like there's a lot of fundamentals involved. But man, it would be cool to have like a scoring system like that, where you could just like put it into your computer, be like, okay, if I allocate 10% of my portfolio into ETH, does that increase my Sharpe ratio? And that's essentially how they do it. Is they say, if I allocate X amount into Bitcoin and ETH, into crypto, how much does that adjust? And so they play around with the numbers, just looking at it until they get the Sharpe ratio as high as possible. And that tells them, okay, overall, you're going to make more money if you do this than if you don't. I wish we had that in crypto, but it makes so much sense. And that's why it gets me bullish, is because it's just like, why wouldn't they do it? And that was his whole point, is like, they're going to do this.
So what you just talked about, we have a little bit of a system for that already. We have an assassins counter in our Discord. It essentially tells you the best score on ChartWise. So it goes through Binance and looks at every single coin in Binance and decides which ones are worse or better based on TA. And it gives you a score from 0 to 8. 8 being the best, 0 being the worst. Below 5 won't even show up on the scale. Right? So if you get a 4 and it from the next day goes from 4 to 5, well, you've seen improvement. You go look at the chart and you immediately start doing a risk assessment. Well, how much farther can this go? How much far? Oh, I can go 12%. Well, this one can go 78%. I'd rather be in the 78% one.
Yeah.
And the scores are similar, but the risk is lower and the reward is higher. So I'll go over here. We've had that going for over 2 years now. So I use that every single morning. I wake up and I'll look and see which one's best or which one's worse. And to be honest with you, I've started to find a little bit of a secret is find the worst one and see if it has a room for improvement. And if it does, well, that's probably the one I want to put my extra in. And if I just keep buying the ones that look the best, well, I'm not going to make as much money, but it'll be safer. So again, I'm balancing the risk reward the same way, right? Now, as far as putting it into a system and telling you how much money you would make, that's a little bit more complicated. I like to do that myself. I don't necessarily trust what the computer says, even though I probably should. But I get it. That's actually a really good thing that they're doing.
Yeah, that'd probably take years and years of trial and error to nail down. But TradFi's had decades. Yeah, they've had decades to test these things and build out these kind of systems for traditional valuation models. And crypto's a little bit more confusing in some ways. Like Bitcoin and ETH, I think, are probably less confusing. But most of crypto doesn't always make sense all of the time. Like weird stuff will happen and you're like, well, that came out of nowhere. That didn't make sense. With some of these smaller things.
I would agree with that.
Especially with influencers able to like kind of push up prices or reduce prices so much.
So that's something I forgot to mention that you talked about earlier. Influencers are one of my least favorite thing. And I could be considered one. Yeah.
Yeah.
So, through a little bit of detective work, and then bait and switch on the part of the scammers, I was able to figure out which influencers are playing the dirtiest. All right. I won't name them because it's not necessary, because you can find them pretty quick, but essentially they only talk about what they got coins to talk about. So they're going to run the price up because the market cap is $10,000. Well, it only takes a couple people to get that trend going. Once the trend gets going, the bots jump in. And once the bots jump in, things go exponential. That gets more people going about it. That's right about the time that influencer does what you said and drops his tokens off on everybody's head, and then the price goes back down. Typically, it's because the person who talked about it first has the most and is waiting for people to give him a way out. All right. I hate that. Now, that does happen. And honestly, that's why I don't fiddle around in those. I don't even do them. I don't dabble.
99% of the meme coin market is exactly
100%. And that's why I don't do it. And now, can you find one that's better? Yeah. But you're 100% getting lucky. Don't tell me that you knew, because you didn't. You got lucky, and it's okay that you got lucky. I'm happy for you.
Have
but
you
don't
seen the
act like
stats?
you're some kind of expert.
Somebody did the numbers on pump.fun, and it's if you made $1,000, if you made $1,000, you were in the top 1% of all meme coin traders.
That's a great point.
That's an insane stat.
So going on that, you probably had something you wanted to talk about, but I just had a thought come to my head. Do you remember? Well, you were in the thick of it. You remember Fire Nest, right?
No, the
top of the
that
boat?
was a Ponzi in 2021.
Yeah. Have you seen any updates?
No, I never got into it.
They're in the middle of a class action lawsuit. It's really interesting, but one of the guys who got scammed took it to the next level, right, and tried to figure it out. It turns out that Zeta Capital and a couple people from this and that, they started in strong and made money. They actually listened to what I said, which is crazy that someone listened to me. They took their money out and they put their money in Thor. And then they took their money out of Thor and put their money in Fire. And only about 21 people made money, like good money. Some people made a couple thousand, but like 21 people made 100,000 or more. And interestingly enough, only 10 or 11 made really good money. The 10 or 11 people were some of the biggest influencers in XRP. A guy who worked for the SEC, who's now a private equity guy in Tennessee, and some of the biggest influencers who talked the most crap about me were the ones who were perpetrating the scam the biggest, which was insane. But they're in the middle of the litigation now. $600 million. They had the British Parliament involved.
Wow.
Yeah, dude. I had no idea.
That's coming
I talked
back.
to the guy for like 2.5 hours the other day, and I was tripping when he was telling me about it. I'm like, no way, dude.
People should be aware that's coming back. You know, like
100%.
Every
I'm
cycle
kind
we
of
get
named
Ponzi's.
in it. I'm kind of named in it because I was the first person to call them a scam, and they come after me when I did that. So I'm considered an influencer because of that, because I said it's a scam and people were mad at me. Oh man, I got lit up for that one. Turns out it was just 100% copy paste Ponzi scam, and no one wanted to hear that. And they even based it off of XRP stuff, the Rising Phoenix. You know what I mean? But that 100% will come back, and I want people to be ready for that. By gosh, next year, post summer, things are going to get crazy again.
That's true, because I remember that happened when you call out scams. Because this happened to me with two projects. I didn't even call it a scam. I just said I sold it, and with one project. So I made a video after I'd made money and sold it. I never made a video about it before that, and I got so much hate. People were reporting my channel because I said it was a bad project. And like right now, you do that. You could call it a scam, and people support you. You're like, thank you. But later in the cycle, people become so greedy that like if it's a scammy project and you point out the flaws and they have money in it, it's almost like their antibodies like protecting the system, right? They're going to come attack you and say, hey, you're wrong. They try to discredit you. They try to go after you and say you're doing this or this and this. Until, far down the line when it collapses, people eventually come back and they say, hey, you were right about that. That was a scam and I wish I'd have listened to you. Which I've had a lot of people come back and do that with some things too. But yeah, the
Hundreds.
Ponzi seasons and Ponzi's, meme coins, that's a natural late stage cycle, because what happens is people buy Bitcoin, make a ton of money. People that miss that buy like the altcoins, the blue chips, make a ton of money. People that miss that go like to these lesser altcoins that are like, they're still like trying, but they're like not really top quality, make a ton of money in that. People that miss that then look at all these Ponzi's, meme coins, and like completely disconnected from reality things, saying, hey, well, I missed everything else. Maybe these will go up. And that's typically when you have Ponzi season. Some good stuff comes out of it. Like it's usually like a lot of weird experiments, especially in like finance and Ponzonomics. But occasionally you get some weird Ponzonomics that actually get adopted by projects later because they're like, hey, that worked. Even though that was a Ponzi, this weird thing they did with the token, or maybe a buyback and burn, maybe it's like a weird staking mechanism that actually worked. And then it does advance crypto a little bit. So there's some good that comes from it. But yeah, you have to be aware that
interestingly enough, you know, the original Ponzi scheme, Charles Ponzi, it started out real. It was a real business. It worked. And then he took it too far and made it into a scam. You know what I mean? It was a real legit thing. And then he said, well, I could scale this up and make millions. And he did. But he ran out of supply and then made the supply up. And then, when you make supply up, AKA mint tokens, what happens? You know what I mean?
Our entire financial system is a Ponzi scheme. And anyone that's ever seen
the US dollar, you really want to talk about that?
Anyone that's
you want to get demonetized?
Yeah.
Hold up.
Well, I mean, I've now having seen these Ponzi's play out, it's like you don't really, I don't think you fully see it till you like play with one of these Ponzi's, you experience it, and then like you learn how the financial system works, and you're like, wait a minute, they're doing the same stuff that this Ponzi did, and this Ponzi did, and this Ponzi did. Why aren't they collapsing?
How dare you?
And
how dare you? We have credit, Jesse. Don't you understand?
Well, my last question for you is, when do you plan to sell this cycle? Like into
2025.
Into 2025, like
so. Yeah, it'll be cyclical. What you just described. Well, they start in Bitcoin and they don't make money, and they do Ethereum. Then they go to the mid caps. Then they go to the low caps. Then they go to the shares. Right. That natural progression will happen in the opposite way on taking profits. All right. So the first thing you're going to have to take profits on are the big dogs, because they're going to go first and they're going to top out first. Then you're going to see a progression. I mean, you could almost use CoinGecko, which I don't like to do, but you could almost start going down CoinGecko with a highlighter and just marking the ones off that have already run up from the top down. They'll start a matriculation process from the top down, because that's always the way money works. People, like right now, the DNC's going on. They're talking about from the bottom up. That doesn't work. If you give poor people stuff, they're still poor. They just have a lot of stuff. So the top down always has to work. I know this because I'm a poor person. So the top down always happens that way. You're going to see the same progression for taking profits from me. First, it'll be I'll take profits in Bitcoin, Ethereum, Solana, all the big boys. Then I'll start, and Solana may be an exception. I don't know yet. It's still way up there, and it's honestly outperforming a lot of the market. So for that matter, I'll probably wait. Render's another one of those. It's way up there. And honestly, they're changing their token name too. What do you know?
But they're just changing it from RNDR to like RND, or they're like just actually spelling out render. It's not like that big of a difference.
I'm changing the spelling of my first name, so I'm not Keith anymore. I'm Keith. You know what I mean? Like whatever.
Yeah.
It's stupid, but it's going to work. So there'll be a progression. I'm going to do the same thing, what I just told you, in May, because I think Bitcoin will top out in February, and then mid caps will top out in April, and then will probably last till May. All right. So that'd be that same progression. Then we'll buy in the opposite way. We'll buy the big dogs first, the mid caps, and then the low caps. And then we'll run those up through the summer, through the fall, and into the winter. Then we're going to have to scale back out the same way again. First, I'm going to go out with the big ones. We saw last time, and if you go back and look at 2016 to 2018, the mid caps and the lowers took profits later than Bitcoin and Ethereum, even back then. So they're likely going to get taken first, and then the money will matriculate down. But once we see the mid caps come out, there ain't going to be no more putting money back in. Once Bitcoin tops, Ethereum tops, and then you start seeing the mids top, then I'm not putting any more money back in. It's only coming out. I'm not buying anything else. Pretty much after Ethereum, I'm not buying anything else. Once it tops out, Binance Coin and Solana, they'll top out. That's it. I'm done. And I'm happy to tell everyone on publicly, I'm done or whatever.
The way I think of this is that the reason like you see Bitcoin and ETH start to lose traction first is because that liquidity is flowing into those mid caps.
Absolutely. And
then, but then, yeah, you're like, it's like a balloon where you're squeezing it and it's like the stuff's going elsewhere, but eventually it does pop and then the whole thing kind of deflates. So it's when overall crypto, when the liquidity starts leaking out of crypto, that's when, the bubble's starting to kind of like deflate. And
to change the terminology for you, what you just described is when the trend breaks and we start going the other side of the trend line, that's when Keith walks away. I'm done. I'm happy to tell everyone, I've already thought about this. Here's what I'm going to do. When I start taking profits on like Bitcoin and Ethereum, and then the mids start to take profits, I'm going to share one GIF and if you can remember this, I'm going to share one GIF on X. It'll just be the British guy on the Titanic going, iceberg, right ahead. And that's it. That's all I'm going to say. That's all I'm going to say, because that's the sign that you're heading to the iceberg and you're about to sink. What are you going to do? You're going to wait till you hit the iceberg? Or are you going to go ahead and do something now? What are you going to do? I did the math on this from what I started with to where I end. I should end up with roughly 2.5 million if things play out the way I want. If we have a blow off top, more than that. So for someone like me to turn what I started with, $6,000 into 2.5 million, don't tell me excuses. Don't give me anything. I don't want to hear it. Anyone can do this. Anyone can do this. You just have to be smart, not be a complete degenerate. Keep your head about you, and remember that if you don't take profits, I get them from you, because there's more of me out there who are being a jerk and going to take your money. So remember that, and make sure you get some of it out too. That's a really good, and we'll end it there. And like you said, anyone could do it, but it takes way more work than most people expect. And I think that's where most people miss, is they think it's going to be easy. It's in fact really, really hard. You guys put in the work, just like if you want to get ripped, that takes a lot of work. Why would you think making millions of dollars would it take a lot of work? If you want to be good at your job, don't you have to work at it?
Yeah.
You don't just magically walk in one day and be the best at the place, do you? No, you have to work at it. It takes effort.
Yep.
It's the same thing in this, man. You got to have the effort to do it, and you got to know when to stop. Then you got to know when to walk away and not come running back. Last thing I'll say, biggest problem I found, talked about this at the beginning, you're going to make a lot of money. What are you going to do with it when you got it? Please don't be the person who blows it, okay? You're going to make a lot of money. I want you to hold on to that money the best you can. Don't be a degenerate. Don't think you're going to be Superman, because you're not. I promise you, even if I have $2.5 million, I am nobody. Do you understand? I'm nobody. That's baby infant money in the real world. So I have to be smart about that, and you have to be smart about it. Maintain your money. I can't tell everybody what I'm going to do when I'm going to do it. We'll have another bull run, but it won't be till 2026. That'll be the bottom. The end of the year, 2026 is when we'll rebuy. I'm going to sell at the end of 2025. I'll rebuy at the end of 2026. I'm telling everybody now. It's August 23rd, 2024. So I'm telling you now when I'm going to sell and buy. There you go. That's legit really going to happen.
Well, hey, we'll end it there. That's great. And it's been great having you on, Keith. I always enjoy talking to you and kind of hearing your viewpoint, because it is so, you have such conviction, and it is rooted in not just your thoughts, not just your ideas, but a lot of technical analysis that you've done, and things that you've learned, lessons you've learned over the years. And, I hope it plays out the way you're saying. I tend to agree with 99% of what you're saying as well. And I'm in the same boat. Well, thank you for having me. I appreciate you giving me a platform to talk about this, because this is not a very well talked about thing. The more we talk about it, the more people will start to understand. Some people are starting to come around now. Thank you for the time. I'll be around. Holler at me anytime. I'm literally anytime. I don't usually check X DMs very much, though. So probably Discord's the better place, because I rarely look at X DMs. I have a social media guy who does that for me now, because I can't stand the DMs. But nonetheless, I appreciate your time. This has been awesome, and thank you.